All crypto analysis is completely useless if we don't look at Ethereum. Ethereum really moves all the tides. Most altcoins are directly tied to Ethereum. When Ethereum goes up by 10%, many altcoins go up by 10% as well. The answer really is in ETH. Have a look at this. On the Ethereum chain, many altcoins are directly connected to ETH, but that's also true on many layer 2s, like the base chain, for example. Here, look at Virtual Protocol, for example. The price of many altcoins is not determined in US dollars. It's determined in how many ETH are in the liquidity pool. So when Ethereum goes up by 10%, automatically, without a single trade happening, in this case, Virtual Protocol also goes up by 10%. So really, it all rises and falls with Ethereum. Not necessarily with Bitcoin, but with Ethereum. And so that then also explains charts like this. So in green, we see Ethereum, and in blue, we see the altcoin market cap. The market cap of others, that's the market cap of the altcoins that are not in the top 10. And they tend to go up and down at the same time. No surprise here. Now still, there are altcoin trades. It's not that everything perfectly mirrors Ethereum, but there is a catch. Those trades tend to be relatively narrow in its trading range. What we've got over here, that's the ratio of the Ethereum market cap to the altcoin market cap. This chart starts in 2018 and it tends to be in a very consistent range. The dotted line here, that's the average ratio of Ethereum to the altcoins. When this is very high, then people have sold their altcoins for Ethereum. When this is very low, people have sold their ETH for the altcoins. So really the swapping of altcoins is explained over here, because that's in the end what happens on chain. It's trades of an altcoin versus ETH and ETH versus an altcoin. Hi, my name is Gerhard. I've been in crypto for the last 8 years. I hit my first million 3 years ago, and I did this through active trading. What we see over here, that's my monthly outperformance over buying and holding Bitcoin. The dotted line, that's the 12-month average. That's how the performance looks like over time measured in Bitcoin. So that's the key. We want to make money versus just passively holding, and we want to do this over the cycles, both in bull markets and in bear markets. This here is a 5-year chart. The premium members then asked for a copy trading pool, which we started last year, that outperformed Bitcoin. Here's the average profit made per member, and this year we are outperforming again, on target to hit again 40% per annum through trading approaches backed by data. And I want to share those approaches again in this video. For example, I like to time the market using golden crosses and death crosses, but not any golden and death crosses. I like to use backtested data. What kind of combination of moving averages creates the best long signal and the best short signal? And so that's what I've done for this Ethereum to altcoin ratio. We do this here on Bitcoin Strategy Analytics. That's a platform available to the premium members to run backtests. And we're looking at Ethereum relative to the altcoins. And that's the matrix that we get. So we've got a slow moving average, we've got a fast moving average. The best combination, that's the 15 versus 17-day simple moving average. That's over here. And this approach historically worked extremely well. Have a look at this. This is again the ratio, Ethereum to the others. And at the bottom, we see the alpha. And that alpha is relatively consistent. Almost every year we do better following that strategy. And interestingly enough, for this particular backtest, we also have a delta of roughly 40%. That's without any leverage, by the way. The maximum drawdown is also much lower. So we are both better on the upside. We've got a better best year and we've got a better worst year as well. A better risk to reward overall. The volatility of that strategy is also lower. So this is how we execute on that strategy. We go short whenever the shorter moving average is below the longer moving average. We go long when we get the golden cross. This here is a death cross, this here is a golden cross. This was just the two moving averages. Here is the price as well. So that's when we go into the altcoins. This here is when we go into Ethereum. And yes, there are quite a few trades following that strategy, but it gives a good short-term hint of where we should currently be positioned. By the way, we are fluctuating quite a bit on the signals recently. We don't have too much of a delta, but in general, red tends to be above white most of the time. So Ethereum tends to be rather bullish versus the alts over the short term. But what about the longer term? For that, I like to use the approach of autocorrelation. So what we are looking at here is a past performance window, and we then roll this over the entire history of, in this case, Ethereum relative to the altcoins, and we look at how did the past performance correlate with the future performance. We've got two time windows that we roll across the price data. Using that analysis, we can answer the question, does past performance really have no impact on future performance? Or is there a connection? The answer is, if we take the right time windows, there's clearly a connection. Historically, the best time window for ETH relative to the altcoins is 30 weeks. That's what this chart here is showing. So we've got the past 30 weeks at the bottom, we've got the forward 30 weeks on the y-axis, and we've got a negative correlation. As in, when Ethereum tended to underperform the altcoins, it tends to subsequently outperform. And when it outperformed, it tends to subsequently underperform. Negative correlation, no surprise. That's simply just a reflection of this chart as well, right? When Ethereum did extremely well, it tends to afterwards not do that well. When it did poorly, it tends to afterwards do better. We are currently very close to the equilibrium, and so our anticipated outperformance of ETH isn't actually that high. We did have quite a bit of underperformance, but have a look at this here. This is the zero line for the predicted outperformance. Let's have a look at the exact numbers. The past return over the last 30 weeks was minus 40%. The predicted forward-looking return is plus 10%. Again, over 30 weeks. So if we annualize this, it's 18%. What does this mean on a chart? This year, Ethereum is likely going to do a bit better over the next half year. Again, if history is any indication. But we do know we are very close to the equilibrium right now. So does that performance make Ethereum worth buying right now over the alts? I'm not so sure. It gives us an idea though that if we want to bet on falling prices of an altcoin and we want to hedge ourselves against the general market by going long something else at the same time, right? We go short an altcoin that we don't like, we go long something else. We can potentially also use Ethereum as a hedge. So you can buy Ethereum and then short something else that tends to underperform Ethereum long term. That's, by the way, the main approach that I use to generate the outperformance. So here, just as an example, have a look at Filecoin. Filecoin has an inflating supply. It tends to grow in supply. Thus, it tends to underperform versus Ethereum. This is Filecoin divided by Ethereum. And then we can take advantage of this. Let's say we want to hold Ethereum over the next 30 weeks because we expect a forward-looking outperformance, a slight one. And at the same time, we think that Filecoin is extremely weak. We can get this kind of a return, right? We can go long Ethereum, we can go short Filecoin. This is the ratio of Ethereum relative to Filecoin, and then we can make money. But of course, risk management is very important. We do have our short squeezes every now and then as well. There's different ways to deal with that. We can use stop losses, we can use additional purchases into the position, basically doubling down on the long-term trend. There's many ways to deal with the volatility. But that goes beyond the scope of this video. I simply just wanted to share the data that I look at that makes winning the crypto game a bit easier, where we then are actually on the side of the venture capitalists and the insiders and the team that always dumps on the retail investor. It's very hard to find the one altcoin that outperforms. It's much easier to find altcoins that long-term underperform. And then the question is, if we bet on a falling altcoin, what is our best hedge to diversify away from the macro? If we don't want to have any bet whether or not all of crypto goes up or down, if we just want to bet on the general structural deficit of most altcoins. And if we have that hedge, Ethereum might be a good option over the next 30 weeks. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. Link to Premium pops up here on the screen. See you next time. Cheers.